Hello and welcome to Business Mornings, a Thursday trade right here in Lagos, Nigeria. So much to unpack. From the latest U.S. Fed decision, I'll also look at trends in Nigeria's real estate market. But first, let's review some markets now. We see oil prices, they edge higher in Asian trading today after the United States seized a sanctioned oil tanker off the coast of Venezuela, raising fresh concerns about potential supply disruptions in an already fragile market. The gains also followed new data showing a decline in U.S. crude inventories. So we see the movement there, 0.4% up. That's for Brent crude, $62.48 a barrel. WTI, that's still sub 60, $58.79 a barrel, but a big 0.6% advance there. But, still from the drops we had earlier, that's why we see WTI not above 60 with this rise. Still keep tracking what plays out in the market today. All right, let's bring it back here to Nigeria now. We see the stock market closed lower in the midweek trade, extending its downward trend as profit-taking in UACN and 22 other equities dragged the benchmark index into the red there by 5 basis points, losing about 78.28 points to settle at 146,862. While the market capitalization, we see that dropped by about 33.8 billion to close at 93.6 trillion there. The decline was driven mainly by losses in medium and large cap stocks, including UACN, Nigerian breweries, Axis Holdings, Suando, Hardin McCall. Despite the negative close, market breadth remained positive with about 28 gainers. Outperforming 23 decliners. We see Japan Gold there, again, its chart 10% up, 2.53 kobo. Prestige, sure, 9.40%. Mercure, they did put out some guidance on earnings, I think, for the first quarter of 2026. We already see companies now, trying to tell us the future of what they expect for earnings, and revenue and all of that. We'll bring you more updates, as they come at this point. So other stories now. Nigeria's daily petrol consumption, that dropped to an average of 52.9 million liters per day in November 2025, marking a decline from the 56.74 million liters per day recorded in October 2025. This is according to the latest fact sheet released by the Nigerian Midstream and Downstream Petroleum Regulatory Authority as the NMDPRA. The NMDPRA points out that despite the decline in demand, the total volume supplied during the month showed increased contributions from both local production and imports. All right, the Economic Community of West African States, they say it plans to end air ticket taxes across all airports in the sub-region, taking effect from January 1st, 2026. So much happening January 1st, 2026. According to the ECOWAS Director of Transport and Communications, Chris Appiah, the move is aimed at significantly reducing airfares and boosting regional connectivity. Mr. Appiah explained that the policy forms part of a broader regional reform package approved by the bloc's heads of states and governments in December last year. Yeah, January 1st. So much to look out for at this point. Let's look at some other economic matters now. President Bola Tinubu has unveiled a new security and economic framework aimed at unlocking potentials in Nigeria's vast marine and aquatic resources under the blue economy. The president made the announcement through the vice president, Kashim Shettima, at an event in Abuja. Highlights Nigeria's marine endowments include rich fisheries, extensive inland waterways, and a strategic location within the Gulf of Guinea. He described the maritime industry as one of Nigeria's most critical sectors, which could diversify its revenue base, create sustainable employment, and revitalize ecosystems that sustain economic transformation. All right, some company news now. Investing in Innovation Africa, I3, have held their third flagship Access to Markets in Lagos, the commercial capital of Nigeria. The two-day gathering designed to connect Africa's most promising health tech companies witnessed Nigeria's National Malaria Elimination Program, NMIP, the presidential initiative for locking the healthcare value chain under the Federal Ministry of Health and Sproxil to combat malaria. Take a listen.
Innovators in the healthcare sector in Africa have been busy. The 2025 Access to Markets A platform created by Investing in Innovation Africa has brought more than 20 of them from 26 African countries, as well as healthcare organizations, local and international, as well as industry leaders together.
The innovators in this room today are seeing or touching over 300,000 lives. And this will increase to over 800,000 in the next 3 years.
The demanding path of impact and entrepreneurship. I don't need to tell you, I'm not
a partner in the innovation journey is the Gates Foundation, with plans to achieve an all-Africa market.
You have committed to move forward with purpose, with grit and resilience. Now, I believe that what you need is the power of our partnerships and how we can support you.
Also in partnership is the federal government of Nigeria.
Procurement in Nigeria and in many African countries is very fragmented. So how do you pull everything together, make sure that the prices are right, also the quality is assured, because now you have a platform that you can quickly check all of this.
The government is rolling out an innovative co-payment strategy that aims to unlock our healthcare value chain. This strategy seeks to ensure that essential malaria health products, such as the ACTs, the MRDTs, the ITNs, are not only accessible and available, but also affordable and quality assured.
Innovators here say their work is practical and tested by users daily.
So you can now ask a question, how do I use this product that I just verified, and get a response in English. And next quarter, we're launching a feature that would allow you to take a picture of your medicine and ask in Hausa, how do I take this? What are the side effects, Igbo or Yoruba? And get a response in audio as well.
And then one of the success stories of the 2025 event is a memorandum of understanding between the National Malaria Elimination Program, represented by the Director and National Coordinator. And they're working hand in hand with Sproxil.
All right, now to our first conversation. We did get the last rate-setting meeting in the U.S. That's for 2025. It was expected 25 basis points cuts, and definitely markets were expecting that, and we did see reactions to that latest decision. But let's hear now from the Fed Chair, Jerome Powell, from yesterday's decision.
By a quarter percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening.
All right, let's bring in Halima Didero now. She's a senior associate financial derivatives company. Great to have you, Halima. So, yeah, we did get that final rate-setting meeting of 2025 in the U.S. It's the third time this year, the cutting rates. How do you see proceedings yesterday and what the Fed chair had to say?
Okay, so the decision was the third for the old year, the year 2025, and the last one. And it goes in line with what the market expected even before the decision. And so the main reason for this shift is because the Fed made it known that there is weakness in the job market, and they're trying to at least help the job market to grow, and because of uncertainties too in the economy, meaning there is a trade-off. The Fed is trying to trade off price stability, which is one of its mandates for economic growth. And so we'll see so many differences and changes in different parts of the economy, even down to Nigeria. But let's first go to investment. We might see investors reshuffling their portfolios to equity markets rather than bond market, because equity market thrives in lower interest rates regime. But because there's an expectation of a more tightening in the coming year, we might not see much rally as expected in the stock market. And if we move down to commodities markets, we'll say that demand will increase because there will be more fund for businesses to operate. And so oil price might see an increase in the coming weeks and in the coming months. And let's come to Nigeria and Africa. What does it mean for us going forward? It means we might see increase in hot money like FPI. That is, investors might shift to Nigeria and some other countries that has higher interest rates to take advantage or take position of such. And apart from that, we might see that borrowings, either for government or for businesses, might see an ease in terms of refunding, that is, ease in global financial costs, which will translate to better financing conditions, both for government and businesses. And so moving forward, we'll see that the overall thing that would affect what the direction will look like for the Fed will be the employment data, inflation, and even the general market response to all of this.
So we see Fed Chair Jerome Powell there. He indicated that the bar for additional rate cuts may now be higher. What do you think this means for markets? Is it really that? I think they're more sensitive about the job market at this point. How are you seeing that?
Yeah. So as I said earlier, that means they are trying to signal to the market that going forward in 2026, there might be more tightening in as regards interest rate decisions. So there will be like a status quo more than interest rate cuts. And that means inflation will have been sustained and moving towards the 2% target rate that was initially set. And that will mean that labor market too will be cooling and not crashing. And also it will mean that financial conditions will warrant the easing before the Fed could move to ease the interest rates. And more than we have now, that means the stock markets might crash. The bond market or the yield in the US Treasury bonds might increase, and we're likely to see volatility as regards the direction and the reaction for the market. So the markets will respond more to employment rates, inflation rates, much more than expectation of what the Fed is likely to do. So, and commodities like gold and oil could become more higher in terms of the price, because the dollar too will become higher, given that high interest rates helps the dollar to appreciate. So those are the things we are likely to see.
All right, and this time, I guess as expected, there were dissenting votes. Definitely, we did get Stephen Myron. He did want about 0.5% cut. Two other members, I think they voted for a hold. So I guess we still have that division right there. What does this suggest about internal views on monetary policy? Seeing the members are so divided at this point.
So for the divergence in the views of the committee member, it's not a big deal. It's expected, because individuals in the committee have different perspective when it comes to the job data, inflation rates, and which of the mandates is much more pressing or important to work towards. And so that's why we are seeing different views as regards what the interest rate decisions should be and what the direction should be going forward. And so that means some part of the committee are more tending towards job growth, while some are tending towards stability of the price pressure in the US as a whole. So it's not a bad thing. It's just trying to tell us that there is no uniformity in terms of direction, which is not so good. But on the flip side, it's trying to tell us that the committee member are looking at the data in the economy differently and with different views and different objectives.
All right, let's bring it back here now for the oil and gas market. We're seeing PMS pump prices, according to your data, has declined by 2.74% to 885 naira per liter from 910 per liter. Talk to me about what's playing out there in the market.
Okay, so the price dropped from 910 per liter to 885 per liter. And we should not forget that we already said because the market is deregulated, the domestic price for PMS will now be in tandem or will be reflecting what is happening in the global market price or direction. So that is not a surprise. And because we now have a refinery in our country and it is working effectively compared to what we used to have before. So it's a good one and it could help in tapering inflationary pressure and also reducing the queue that we usually have in the filling stations during this festive period, which could help in movement of people, goods, and ease logistics cost for companies. And so it's a good one for our inflation. It could help reduce the month-on-month inflation data that we are expecting. So it's a good one for Nigeria.
Right, and you did advise me last time to try and do some of my Christmas shopping, food shopping this week. I've not done that yet. What are you expecting next week?
Okay, so when we checked the prices for commodities in the markets, we see that most of them still stay flat, but pepper is still increasing because of seasonality effect. And we see that tomato is a bit lower in terms of price. This is because most of the farmers are now harvesting what they have on the farm because dry season is eating deeper. So in order to reduce the rate of loss, so more harvests are being done, and that's why we are seeing more supply into the market, which is crashing the price of tomato. But for onions, it's still stable, although the fresh or new onion is a bit lower than what we have here, which is 170. 170 goes for the price of old and dry onion, while the new ones and the fresh ones are a bit lower. But people prefer the old one because of the taste and all. So that's what we have now. But we are still going to see like an increase, as I said, on Tuesday. Definitely. It might not be much because of consumer resistance and maybe less disposable income, but definitely we are going to see a surge. If not a high one, it will be a moderate surge in the prices of commodities and domestic commodities.
All right, so Halima, what are you telling me now? For Christmas, if I'm trying to make, a pot of jollof rice, get some maybe fried chicken, fried turkey, hopefully some fried ram, what's that going to cost me this Christmas? What are you seeing?
It depends. It depends on your plan as regards the guests you are expecting. So the quality and the quantity will depend on the number of people you are expecting to entertain. And
just
so
a few people, maybe about 5 people, hopefully.
5 people. It depends. It depends also on what you are ready to cook or you are planning to cook to entertain your guests. So it's not a one size fits all. It depends.
Okay.
So, but just be rest assured that if you are not shopping now, you might be paying higher later in the next 1 to 2 weeks.
All right, I need to try and round up and go and do some shopping. Hopefully, thank you so much, Halima, for breaking it down for us. Thank you. All right, to other matters now. Let's look at tax. You see, ahead of the implementation of the Tax Act from January 1st, 2026, the Joint Tax Board is now changed to the Joint Revenue Board, stated by the laws. The board has also changed its logo. An announcement made during a meeting of the board with revenue officers from 36 states of the Federation and the Federal Capital Territory in Abuja. The new board is now headed by an executive secretary, Mr. Olusegun This is one who is promising Nigerians that the implementation of the laws will usher Nigeria into the era that will see a boost in socioeconomic activities. Take a listen.
It's a win-win for everybody. The laws that the president has signed will create a fair, efficient, equitable, and transparent tax system in Nigeria. Looking at the laws, there are lots of reliefs for businesses. So the laws are business friendly. There are a lot of reliefs and even exemptions for low income and middle income earners. We are creating a system that will support those who are down the ladder, that will also support those who are up the ladder, so that they can have more capital to invest in the country, create jobs. Government will derive more from taxation. The tax system is going to be wider. We are creating a system that will be solely driven by technology. The human interface will reduce, leakages will be blocked, and there will be more revenue for government to provide services for the citizenry.
Well, let's look at Nigeria's property market. Now, see, Nigeria's real estate market is entering a new phase as fresh data from the 2025 Real Estate Capital Trends Report reveals a major turnaround in transaction activity, a surge in brownfield redevelopment, and rising interest from both local and international investors after a record five-fold jump in acquisition volumes. Growing foreign reserves, easing inflation, and a more stable currency. The report shows how these shifts are repositioning the sector as one of the most influential contributors to GDP. So pack the data now with Dolapo Omidire is the founder and research director, Estate Intel. Great to have you on the show. Good morning.
Hi, good morning, Ladi. Thanks for having me.
Fantastic. So, see, the report shows acquisition volumes, that's rising from about $53 million to $336 million in 2024, a five-fold jump. What do you say is driving this surge in activity in the real estate market here?
Yeah, between 2023 and 2024, we saw a massive, 4 to 5x jump in transaction activity. In the report, we document that the main driver was owner-occupiers deciding to buy their own office buildings, and some income funds also deciding to acquire existing office assets. So office activity, hospitality activity, or investments in those sectors are what we've been seeing, or what we saw majorly drive the transaction activity between 2023 and 2024.
All right, so what's this data really telling us at this point? We know the real estate market, depending on where you're coming from, if you're renter, definitely you're under pressure, trying to find the right property at this time. Round it up for us. What's this data telling us?
I mean, yeah, like you said, if we're looking at it from different perspectives, the story will be different. If we're looking at it from the residential side, taking away all this capital market trend activity, rental pressure is, through the roof, especially residential. The unfortunate part is even if the landlords increase the rent and the existing tenant can't pay, somebody else in the market out there is going to be able to pay that new rent. So it's putting a lot of pressure on residential occupiers. On the commercial space, when we talk about office and retail, in office, the market has been largely stable. Most buildings have been growing in occupancy. And most buildings have been growing in occupancy. And what we're seeing is that stability is translating to the acquisitions. So some of the stable assets have been acquired, and some office occupiers, instead of renting buildings, they're just saying, it's probably smarter for me to buy an existing asset. Or if they wanted to build, they're saying, let's just acquire something instead of taking the construction and development risk. So that's sort of what has been happening and what we're seeing.
Right, and talking about construction risk now. So we've had FX stabilizing around 1,422 per dollar. Reserves hitting new highs. Inflation that's easing. So how much of real estate this renewed momentum how much of that is tied to Nigeria's improving macro environment in your opinion?
It's a strong relationship. With most things, commercial real estate, when you're operating at that grade office, retail, hospitality level, it's very, very linked to FX, because most of the construction inputs for those types of projects are going to be imported. So when there is some stability, it really does, even if it doesn't immediately create some recovery, it creates a sense of stability and an ability to plan for a lot of the developers who are building or the people who want to build.
So, we're seeing the sector now contribute about 13.3% to GDP. That's real estate services, now contributing about 13.3%, making it the third largest sector. What does this tell us about, the resilience, of this sector?
I mean, if we look historically, the real estate sector has sort of trailed. It's not been a lagging sector. If we check prior to last year, to 2024, it's usually fifth place, maybe sixth place in some quarters. In some quarters in the year, it's usually more active because there's a lot of construction development activity, and in others, it sort of tapers off. But what we see or what we saw at the end of last year for 2024, and even in Q1 in 2025, was that it is now not a frequent or semi-partial big player. It is definitely a big three sector, which is what we've been saying in the reports that we're discussing to clients about, and in this capital trends report. So, I mean, when we're, like I mentioned, with the commercial real estate market, this economic stability, it really trails into the investment, because if you're seeing a lot of projects now that are maybe topping out, that are in active construction, it's not today that those decisions were made. So what we're going to be seeing now is that in the early stage, that the economy is going to lead to a lot of early stage projects that are going to start, development starts, people deciding, okay, let's go out, let's hit the ground, let's start building, let's start buying, let's start renovating. And then maybe in the next 2-3 years, we'll start seeing some completions in the years ahead.
Right. Now, we see the report suggests that, Lagos office and retail markets are, heading into recovery. Are we looking at the lowest entry prices of this real estate cycle?
Yes. Yeah, you've quoted it bang on. What we're expecting is that if we do proceed or we continue with the current economic stability narrative and the current the look and feel of the market at the moment, we're expecting that moving forward, prices are going to appreciate. With the other non-niche sectors like data centers, industrial, and on the other side, resi, those have been in expansion since COVID. They've been on the bull run since COVID. But office, retail, and hospitality entered some level of hyper supply and then eventually recession. But now we're starting to see that bottom out. We're not seeing the prices significantly fall. The only sector that is still lagging a bit is the retail sector. So with office and hospitality specifically, we're seeing that in the next 1 year, 2 years, if things remain stable, with some of the regional stuff going on in ECOWAS, what's happening in the US and interference in Nigeria, I'm not sure how that can affect. But if we do maintain the overall positive narrative of, okay, reforms are happening, growth is happening, that should really bode well for the office and hospitality sector specifically. So we should start to see that prices will rise. So as you mentioned, right now might be potentially the best time to enter if you're looking to acquire, if you're looking to participate in the secondary market.
Definitely, I know you keep your eyes on, what's playing out in, Nigeria's real estate market, Lagos, Abuja. What other interesting trends did you notice, in 2025?
In 2025, or I'll say in 2025 and 2024, we saw quite a lot of institutional investors start looking at Abuja again. This isn't been documented in this report, but as you mentioned, just a general trend. We've seen quite a lot of people with conceptual projects that have been on paper just design stage for 5 years. They're starting to come back and ask questions and say, okay, you know what? Can we revisit this? Let's do some market research. Let's revalidate this opportunity. There are some things going on in Abuja, but I think the fact that we're seeing institutional investors sort of return to that market is indicative of the overall growth that we can expect. The last time we saw this type of interest in Abuja from big institutional investors was back in 2014-15, when the first round of retail and commercial investors came to Nigeria from South Africa, all the PE funds. So it's a good signal. Not all of it is materializing yet. Abuja can be politically risky as well with those who are approving and doing all of that. But it's a good sign to see that the growth is going beyond Lagos. And hopefully it does translate into some brick and mortar construction or acquisitions in the year ahead.
Right, and you did mention some businesses, instead of building from scratch, because of construction risk, they buy existing buildings and they do it up. But is that also playing out for residential estates? Because I'm also noticing in estates like in Adeni Jones area, see some old buildings. They have to bring it down and put up some smaller modern houses. At this point, it seems like that's a trend that's catching on at this time. But you still have to bring the property down, I guess. So that's still a lot of cost.
Yeah, I mean, I think I can break it down into two sectors. So with the commercial real estate space, which is what we documented in the report, the main driver is building costs. So replacement cost for a grade A or grade B office building right now is through the roof. So it might make more sense to buy an abandoned property and redevelop it, or buy a property that is nearing completion and just decide to occupy it, as opposed to taking the construction risk. And we've seen those types of refurbishments and renovations happen at a much faster pace over the past 5 years. I think between 2009 and 2015, there were just a handful of projects, but between 2016 to date, since inflation started rising, it's through the roof. If we're looking on the residential side and the example you gave, I think there's a dynamic to that. On the mainland, land is a lot more scarce. So most likely, if you're looking to develop a new property, even if it's in the residential space, or especially if it's in the residential space, you're most likely going to have to buy an existing land parcel that has a property on it, maybe buy 2 or 3, knock them together, bring the building down, and develop a brand new property. It's just, you find that more likely happening on the mainland, where it's already been developed over the past few decades, than in Lekki Phase 1 or in Shombutedu, where there is excess land available for development. So those are the dynamics that I can see that.
Right, and definitely talking about the mortgage market now for residential properties, people trying to own houses, at this point, we're seeing some moves by the government, to, get the mortgage market working. What are you seeing, from your end? Are you seeing, Nigerians actually benefiting, from this renewed vigor we're seeing in the mortgage part of the market in Nigeria?
100%. I think that the MOFI project, or the MOFI MREF, that is being managed by ARM, is a really good initiative. That's the pioneer one that's ongoing, that is giving Nigerians access to up to 100 million naira at about 9.75%. It's a really good initiative, and I know a bunch of people who are either in the process of trying to apply or who have already applied. Now, I think what just needs to be done is more education, because every now and then, I'm in real estate, so I find myself just saying, oh, know that you can get up to 100 million with this project, and not enough people know. So I think it's a good project, but we just need to do a lot more education. We need to get the word out, because people when you explain it, it sounds too good to be true. So some people are even skeptical. So it's a really good initiative. I think we just need to do some more market knowledge and education to make sure everybody understands and is aware that this opportunity is actually available. But yeah, it's a really good initiative, and it will have a positive impact.
Yeah, because when you cast your mind back to when the naira was still maybe about 300, to the dollar. We know the prices of properties, back then, but now you need so much naira, to get a property. Right now, hopefully we get more strength for the currency, so we don't need to get, because I remember there was a time you could get, a detached house in maybe Chevron for about 50 million. That's not the case now. The properties are really, really expensive, and that's due to the weakness, of now. But we'll keep, tracking the market to see how Nigerians can afford more properties. Thank you so much. It was great having this conversation with you. Dolapo Midire is the founder and research director, Estate Intel. Thank you for coming on today.
Thanks, Ali.
All right, we'll take a break now. When we come back, we'll find out what's playing out with Nigeria's crypto legal side of things there. How do we get all of these regulators together? That's our next conversation. Just stay with us. Conversation. Nigeria is without doubt a global leader in cryptocurrency adoption for millions of young people and businesses within digital assets, already an essential part of daily financial life. But while the market is moving at light speed, the law is still trying to catch up. We have a situation where the CBN, the SEC seem to have different views, creating a regulatory fog that leaves both investors and fintech companies in limbo. So we're cutting through the confusion now. We're asking most critical questions about the legal future of digital assets in Nigeria. Joining me for this conversation, we have Janet Temitope Wilade. She's a partner, Austin Peters & Co. Great to have you on the show. Good morning.
Good morning.
Yeah, so, definitely, with tracking cryptocurrency, digital assets for the longest time now, it's definitely not an easy side to regulate. It's not an easy industry to regulate. It's not an easy market to actually regulate, because it's like money from the air, at this point. But from a legal standpoint, Nigeria currently, we have different definitions of cryptocurrency and regulation. What do you think the regulators need to do at this point, to get it right, get that unified regulation, for this segment?
Okay. Currently, in our laws from the ISA 2025 as enacted by the Securities and Exchange Commission and frameworks developed by the SEC, the word cryptocurrency is currently not in any of the laws. What we have is digital assets. And that's what cryptocurrency is now referred to across many jurisdictions across the world. So what we have is digital assets. And it's just the SEC, that's the Securities and Exchange Commission, that's provided for that. Most other agencies are silent when it comes to regulation for digital assets. The primary body currently is the Securities and Exchange Commission. But that being said, yes, digital assets are provided for, but most importantly, what is missing is blockchain. It's important to understand that digital assets is an offshoot of blockchain. Blockchain is more like the parent body for the technology. It's a distributed ledger technology. And that, as a whole, is not provided for. And what we've had is fragmentation of laws from, the SEC now provides for digital assets as security. The payment system aspect of digital assets, which ought to be, catered for by the CBN, is not provided for. Digital assets are payment instruments And the NFIU is trying to make regulations to cover that in order to prevent, money laundering and terrorism finance. While these bodies are providing fragmented laws for digital assets and offshoot of blockchain, they are doing the right thing, but the fact remains, let's just see blockchain or digital assets, as an octopus with different tentacles. What we're having is, the different regulatory bodies, just pulling different tentacles, pulling and providing for different tentacles of this octopus, but the octopus itself, that's the parent body itself, is unprovided for. And if there is no harmonization of regulations, if the stakeholders and regulators don't come together and effectively provide for digital assets, for blockchain as a whole, we stand to stifle the development in the industry. We stand to, have capital flight where, Nigerians, young Nigerians that have waited so long for the development of the industry and not getting what they want, they tend to just, move on to other jurisdictions that have provided for these businesses and develop their businesses there.
Right. So, in your opinion, which institution, legally has primary jurisdiction over, I guess you said there's no crypto now, digital assets, in Nigeria? Is it the CBN? Is it the SEC? Is it NITA? If we're looking at it, from the crypto side of things, or is it a combination of all of them?
Okay, looking at currently, legally, the SEC, that's the Securities and Exchange Commission, is the parent body, the regulator for, digital assets now. And it's applaudable that the SEC took that step to even allow digital assets in Nigeria. Prior to now, we've had a ban on crypto assets. So we can even now come out and talk or say, ask for further regulation because of what the SEC has done. And we're working with, currently with the Honorable Bamishile on the, that's the House of Rep committee. They had a committee that was set up for the investigation of crypto assets, adoption of crypto assets in Nigeria. And the committee has come together to see how beyond crypto assets, beyond digital assets, blockchain can be provided for as a whole. How stakeholders can come together from the CBN to provide for digital assets as payment system, to NITDA providing for it as a technology, to Securities and Exchange Commission still handling the securities aspect. We still have the issue of stable coins, and it's very important to understand that blockchain is a technology, primarily a technology. And just to help us understand what this is, it is a distributed ledger technology. It records transactions across many computers at once. What we are saying now is to ensure, transparency and immutability. So whatever we're doing, we're like 3 million on the network. Whatever transaction I do, 3 million of us, once it's done, we have it, we all know about it at once. It can be altered, it can be deleted. Now, this is a recording system. It's a technology that can be used for supply chains, for industries. Imagine having the entire petroleum industry on this platform, where from every single drop of oil that is drilled to the distribution can be tracked. Or going into businesses, this is a supply chain. It can be used as a supply chain. Now, we're also talking of the financial aspect. It's also a security tool for national security. Finances can be traced. You're not looking for anything. Blockchain, cuts out the intermediaries. What we are saying on the blockchain, for example, CBN, monies are issued to banks, banks to individuals. And it's whatever the banks report back to the CBN that we all take. But right now on the blockchain, what we stand to gain is this. Everything is transparent. You're cutting out the intermediaries. Every single transaction can be traced. So nobody is reporting back to anybody. So this is also a tracking system for finance, for security, we can use it for, anti-money laundering tracking and anti-terrorism finance tracking and all that. So a lot can be done. So you can't box this under one agency. Blockchain is bigger than, just saying it's securities. It's bigger than just saying it's a payment system. It's a technology. It's a tracking system. So what we are proposing is this, that let's have a council for the blockchain industry let there be a bill, a blockchain bill, covering every single aspect of blockchain, not just digital assets, but the technology as a whole, the payment system, the tokenization, the mining. Every aspect should be covered, the nodes, the infrastructure. No one is even talking of the infrastructure for the industry. That's the node. If you see what a node is, the node is less than half. I'll explain what a node is. It's less than half of your power bank. And a node can carry as high as uncountable Bitcoin or cryptocurrency. And when you can, go through immigrations, you can go through, security with just that node. Because even our security agencies are not aware of this. And you are there looking for, okay, how much are you declaring? But someone is passing with this equipment and is moving more than, unimaginable
you can move like
currency.
$1 million in a flash
simply
drive.
Because you don't know what it is. In a flash drive, so to say.
Right.
That's what it is like. So there is need for us to understand blockchain as a whole, the advantages, the disadvantages, and protect ourselves. And this can be done by boxing it under just one aspect or under just one agency. There's need to have a bill that brings together relevant agencies under a council where everyone can come together, with the operators, rub minds together, and cover for blockchain as a whole.
All right, thanks for that, Jenna. But, for our viewers on DSTV, we're joining live coverage now. The Nigerian Midstream and Downstream Petroleum Regulatory Authority. The event is the launch of a gas trading license, clearinghouse, and settlement authorization. That's for our DSTV subscribers there. But all of you can follow the money right here on other platforms. All right, thank you for breaking it down for us, Jenna. But, at this point, I'm wondering, fine, we're trying to get, a unified law, for this technology and different aspects of it. And you did mention there's a risk of, if you don't have that clarity, in your country, most people that want to do business will take it to another country that has, clear laws, when it comes to cryptocurrency, blockchain, digital assets, and all of that. So what's the risk here, if you want to do it from another country, in your opinion?
First think of is even data sovereignty. Now, for every time this industry is not regulated and Nigerians have to go out to other jurisdictions to operate on exchanges, what we have is data of Nigerians on these foreign exchanges. So we don't have data sovereignty. Our data is being moved outside our jurisdiction. This bets another problem where Nigerians are swindled and, some of these foreign exchanges fold up or monies get missing. We can't track them also because of jurisdictional issues. Now, before the police writes to this, there are instances of where monies have gone missing or cryptocurrencies have got missing, and the exchanges can't be held liable because they are outside our jurisdiction. Also, we risk capital flight, where monies from Nigeria is taken outside the country. There was an instance where one of the former CBN governors was shouting that certain amount should be in circulation, but, way less amount is being seen in circulation. And this can be understood. Nigeria is second in adoption worldwide for crypto assets. That simply means a lot of persons have invested, which means you've converted your fiat, you've gotten monies here, you've converted it into digital assets, and now these exchanges are not in Nigeria, they're outside exchanges we can't trace, and monies are in there beyond Nigeria's jurisdiction. That's, one of the other problems we're having. And most importantly, as long as there's no regulation, full regulation and licensing for genuine market operators, that's genuine exchanges in Nigeria.
Right.
The truth is then you cannot say these are the fraudulent ones because there will always be a mix-up. As far as, the security agencies are concerned, everyone will be seen as fraudulent or illegal simply because regulations have not provided adequately for them and adequate licensing for the genuine operators that wish to be licensed.
Fantastic. So much to unpack there. And, definitely since, this technology, most of us are still trying to, understand it, the financial part of it, the technology part of it. But at some point, I guess we'll all grasp it, at some point. Thank you so much. Janet Temitope Oyelade is a partner of St. Peter's & Co. Thank you so much for joining us this morning. I guess the conversation,
thank you.
Continues at this point. Thank you.
Okay, thank you.
All right, we'll take a moment now. When we come back, we head straight to the global economy. All right, we have Willie Bong with the details now. What's playing out in the global economy? How's it looking?
Oh, well, it's looking as it should look because, we did see, you talked about it earlier, Powell decision, Fed.
Yeah, finally.
That divided house
one.
they had there.
Right.
And finally, we saw that third rate cut that was expected in line, with expectations, basically the 25 basis points that investors and market watchers have been looking out for. But the point is, it's looking like it's going to be a rough road ahead in terms of are there going to be any further rate cuts.
Yeah.
And if Powell will still be available or around, going to stick around to be able to give these decisions, or we'll watch and see. But you're talking about real estate earlier as well. Now, one of my first stories is about luxury apartments linked to, Chinese drone investor being, in trouble here. But let's just see what's going on there. Now, a collection of high-end London apartments tied to an investor in Chinese drone giant DJI have been put up for sale. That's including a £68 million Mayfair penthouse. Now, the portfolio features more than a dozen properties with at least 8 units at Mandarin Oriental Mayfair, listed above £20 million. Another 8 apartments at Embassy Gardens in Vauxhall also on the market. Rocky ends there. We'll see how that plays out. Now, Volkswagen is weighing the launch of electric cars fitted with range extender technology in Europe, and the U.S. has weaker government incentives and charging concerns dampen demand for fully electric models. And the car maker is assessing whether to add the technology already popular in China to its best-selling SUVs and sedans, though no final decision have been made. Now, let's look at still in Europe. European gas futures picked up from a 20-month low as weaker LNG shipments raised supply concerns. Imports into Northwest Europe and Italy have slipped in December, even as mild weather keeps heat and demand soft. Let's look at what's happening with JP Morgan, who is preparing to open a new branch in India for the first time in almost a decade. According to people familiar with the matter, and the bank has received in principle approval from the Reserve Bank of India to set up its 4th branch in Pune. Now, the new location near Mumbai will serve corporate clients with services ranging from transaction banking to term lending, reflecting JP Morgan's growing focus on India's fast expanding economy. Now, the NVIDIA supplier SK Hynix says it is exploring a possible U.S. listing after a Korea Economic Daily report suggested the chip maker may float about 2.4% of its treasury shares as American depository receipts. The company confirmed it is reviewing options to boost its value, but stressed that no final decision has been made. Shares have surged nearly 230% this year, driven by global demand for AI hardware, especially its high-bandwidth memory chips used in NVIDIA processors. A U.S. listing could help narrow its valuation gap with rivals like Micron and Samsung. SK Hynix is also ramping up investments, including a nearly $4 billion advanced packaging plant in Indiana, where South Korea weighs a multi-trillion won foundry plan to bolster its semiconductor industry. Now to Saudi Arabia, stock market has just suffered its worst performance in 10 years, falling behind other emerging markets that rallied strongly. Traders say the outlook for 2026 remains weak. Now, with oil prices sliding and forecasts of a super glut next year from Trafigura, investors see little incentive to buy in. Citigroup analysts advise underweighting Saudi stocks, noting poor performance on earnings growth and momentum. And finally, we see Schneider Electric plans to repurchase up to 3.5 billion euros of its shares by 2030 as part of a new profitability push powered by AI and electrification. The firm expects its adjusted EBITDA margin to grow by a cumulative 2.5% organically by 2030, a sharp upgrade from its earlier goal of 0.5% growth between 2024 and 2027. Those are the highlights from the global space. We hope to bring more tomorrow. That's all. I'm Willie Bong.
All right. On the local bourse, now we see 146,891. Just checking the terminal on investing.com. We see Access Holdings there, most active stock, Japan Gold, First Holdco, Regal Insurance, ICO. Right now, those are the stocks getting attention from investors. Definitely, we'll give you more updates at 1:30 on Business Incorporated. Thank you for watching. I'm Ladi Williams. From me and the team right here at Channels HQ. Bye for now.